Well, good evening, everyone. Welcome back to the channel. So, we have a new addition to the fund family today, which is APLY, or the same type of fund as TSLY and OARK, but for Apple, hence the ticker APLY. So, today was the first trading day for APLY, so we will go to Yahoo Finance and look at this one. And it probably will be very similar, like I say, because it's part of the YieldMax fund family. So it should be very similar to OARK and TSLY, our new favorite one. So we could see possibly the biggest dividend being the first payout the first month. So probably within the next 30 days or so. We'll see. We'll see how soon that comes. But there's a lot of excitement around this one. So let me pull up Yahoo Finance here. We'll look at the performance of that. We'll look at the performance of TSLY, and we'll look at the performance of OARK. So we'll do a trio of funds tonight. So first, let's start with the newest kid on the block here, APLY. And let's see, share screen, Yahoo Finance. Okay, let's see. Look at their Netflix, freaking Netflix. Just because they can't get more customers, they want to crack down on password sharing. Anyway, okay. I think it's called Title Trust. Title Trust, Roman numeral 2, and it's already up $1 tomorrow. So 2020 that it closed at today. Hindsight is 2020, right? So it's up a full dollar as of tomorrow. The trading range today, it was between, let's see, 2031 and 2010. So it fluctuated about 20 cents. And let's see, give me just a second here. I'm going to stop the screen for a second and we'll come right back to it. But yeah, so just one day of trading sample data so far. And okay, let's do this. Do this here. And then, okay, we'll go back here and resume. Okay, Yahoo Finance. Where did it go? Oh wait, this is just Yahoo. I must have closed it out. All right, Yahoo Finance. Let's see here. Let's see. Okay, so back to APLY. Again, there's not a lot to see because just one trading day so far. All right, so yeah, 2020, it's up $1. It's up 5% in the after hours tomorrow. So this is kind of behaving like an IPO. So we're going to see some kind of craziness in this before things settle out. But and here's see new listing. APLY is newly listed on the New York Stock Exchange, effective April 18th, 2023. So it could be. I'm not sure when we'll get the first dividend, but I'm thinking maybe a month. So I think this is the third addition to the family, and this YieldMax company, who also goes by another name, I think, as a commenter pointed out, which I'm drawing a blank on, unfortunately. But TSLY and OARK are trading at about $15. Well, OARK is about 81 cents higher, but they're very close in the trading range. And I think we can get an idea just by looking at OARK on the potential future of TSLY. Hopefully, TSLY will buck the trend because what's been happening with OARK, which we'll look into next, is the dividend has been falling and falling. So I believe the expense ratio in all of these is about 0.99%. OARK has been around about the same amount of time as TSLY, and it's dropped from 2002 to 1581, but it came back to 2057 in February, and that was before the market started kind of, the market's just been really choppy still. What is this doing? Okay, let's see. So yeah, there's that. The low point that it was at was March 10th, 1494, and it came back, it rebounded to, let's see, 1658. historical data. Dividends only. Dividends only. So what you'll notice is, and I might have showed this yesterday, but the dividends since January. So, okay, here's a good sample study to think about. So the fund went public November 25th, didn't pay its first dividend until January 10th. So about a month after it went public. So that was 74.5 cents. Then it paid out $1.09. And if you notice, the stock or the ETF fund price climbed to where it was like, actually it was in the green. It was like 20.56, I think we said. So it paid a higher dividend. And then in March, it was 76.9 cents. In April, the dividend dropped to 51 cents. So we'll have to keep an eye on the other ones like TSLY to see if something like that happens too. So, and let's see. Okay, we have 6 live viewers. William here showed up first, and let's see what he has to say. He says, I hope Berkshire Fund comes out sooner this year. I want to invest the dividends from my TSLY to APLY and the Berkshire Fund. That's a great idea, I think. Buy a little bit of all of them. And then Mr. Williams says, and I want to use margin for both of those to boost my income. What do you think of using margin to collect extra dividends? I use Robinhood right now. It's 7.5%. I have to say a no on that one. I'm not a big fan of doing things on margin. Your broker can kind of trick you, because a couple of my accounts that have like that are optionable, I have like level 3 options enabled, and next thing you know, and this happened to me once, but you all of a sudden get assigned on an option. Next thing you know, you're buying on margin, and you have to pay interest, like you pointed out, 7.5% to Robinhood. So you have to pay interest on that. I would rather just have the money. I don't even want to get tied up with margin, and then there's such a thing as a margin call, which is the title of a movie, really good movie actually. And I think, oh, look who showed up here. And I think you're saying don't. You're agreeing with what I'm saying, because I'm saying don't do margin either. But as far as using the dividends to buy into the other ones, I don't think that's a bad idea at all. In fact, I like all of these. I like TSLY the most. So I went pretty big into that one Monday, which was yesterday. So, and got in for a decent price. But yeah, so the OARK, the Cathy Wood, indexed. I don't think it's an inverse fund. It's just a covered call fund. But OARK is somewhat correlated to her fund. So anyway, with that, now we're saving our favorite for last, the TSLY. And let's see here. Okay, so we looked at OARK. Now TSLY, and I'm not sure if that dividend is posted or not. I think, well, it's 83 cents basically, wasn't it? So TSLY dropped to $15 even today, so it's like 3 cents higher than what I bought it at, and it's up in the after hours to 15.21. But I really think that at this point, the main draw to this one is the dividend or the covered call payout, because the price is fluctuating a lot. So if you got in at a reasonably cheap price, I think you're okay. This one debuted literally almost the same day, maybe 2 days before OARK, which I just discovered because I'm kind of learning about all of these at the same time. But if you follow the chart, if you overlay TSLY to Tesla, they have pretty much like a direct, like 90% or higher correlation. So let's see. They just paid the dividend. I just missed the April dividend because I got in too late for that. I just got in yesterday. And I think the ex-dividend date was like April 6th or something. So if we look here, you'll notice that it dropped, but it didn't drop as much as the other one. So we've had 4 dividends so far. January, February, and March were all in the 90-cent range. January happened to be almost $1, 99.9 cents. And then February and March were almost the same at 90 cents. April wasn't far behind, but it did drop to 82.9 cents. So this one's pretty solid. And we're going to have a lot of these coming. There's going to be one for NVIDIA, one for Berkshire Hathaway. And it's going to be a great thing for a lot of people, because most of us can't afford to get into Mr. Buffett's Berkshire Hathaway. But with this, just like with Tesla, you're getting in for like a 12th of the cost. So it's going to allow more investors to participate in the upside of a company like Berkshire Hathaway, which has done phenomenally. And I think the A shares of that are something like $400,000. So most people, don't have that kind of money sitting around just to buy one share, much less multiple shares. So let's look at that just for fun here. The A shares of Berkshire Hathaway are up to almost 500,000 now for just one share of the stock. Now, if you really want to knock yourself out here, look at the last 5 years, how much this has gone up. And what's crazy, I'm looking here, this has an insane negative earnings per share. Look at that, negative 15,584. Never seen that before. Yeah, back in 2018, this is like owning a house. This is like if you bought a house at this time, this is what you paid for it, and it's like what it's worth now. Maybe not quite, but going back to like 08, look at this one. I mean, you would have like 5x'd your money if you had bought this. Even as recently as like 2014, it was like 200 and something thousand. Even as recently as 2015. And let's see, do we have an earnings here? Well, we'll look at the B shares. Let's see, how far back does the history on this one go? 1984. Interesting. Okay, so let's see what the B shares. So market cap for this one's almost $1 billion, or not, almost $1 trillion, which is like a third of Apple. Now, Berkshire B shares, $324, which is still, that's almost like where Tesla probably should be priced. So you would be getting into Berkshire for a much cheaper price. Now this one, interestingly, has a negative 10.49 earnings per share, which is funny because we don't typically think of Mr. Buffett as one that loses money. But both of these have a negative EPS, which is rather interesting. Now, the last one didn't show earnings, but this one, 3 out of the last four quarters, it's beat earnings. And for whatever reason, and that's something I have to figure out how the earnings calendar works, because I'm definitely not an expert on it, but August 6th is the next earnings report for Berkshire Hathaway, which that's a long ways away. I'm not sure why for quarter one, why it takes that long. That seems kind of crazy. It's like some of these companies just pick when they want to report earnings. But I do know earnings season is kicking off here with Alcoa. Alcoa is like the unofficial kickoff to earnings whenever they report. They're like the first one. So we're going to be in earnings season here. So lots of good options plays, earnings blast plays coming up. So thing to keep in mind there. Okay, let's see here. King Leon says, don't use margin as if the NAV goes down and dividends are reduced. Excuse me. Dividends are reduced, you are stuck. Yeah, that's the thing. I'm just not a big fan of
Internet más rápido que un velociraptor en un cohete y cada vez
I'm
más
starting to
rápido.
get noisy
Obtén
ads
Xfinity
here.
Internet por solo $25
Now I've got
al
to,
mes sin contrato
you're going to hear
anual
this for a
durante
second.
nuestra
I've got to get
celebración
back
de
in my
lanzamiento
screen.
por tiempo limitado.
Freezing
Presentamos el
up on
10G
me.
Network solo con Xfinity.
Drives me nuts. Anyway, okay, back to the comments here. So anyway, well, cool name. I like that name. And like I was saying, yeah, margin called is definitely a distinct possibility with using margin. And then you have a question here. The dividend of the fund depends on covered calls income, which depends on volatility of the stock. Right. I don't know how volatile the Berkshire stock is to generate a high covered call income. Well, let's see. I just had it up, but I mean, you can see the chart here. If you zoom out, it looks like solidly up for the most part. And let's see. We'll get into the other comments here. We're starting to get a little bit of a backlog here, which is good. So Berkshire, let's see. The negative earnings shocks me. It really does. This one is more volatile than you think. I'm looking at March 6th. It was 317. It dropped all the way to 293. And then it shot all the way back up to 324. So that, if you could time this, I mean, that would have been a great like call option play. 8%, 8.8%. When you get in on something like that, when the stock goes up 8%, remember the call options are magnified significantly. So, and then let's look at the A shares, Berkshire A. It's funny because owning one share of the stock's like owning a house. Basically, if you had bought 5 years ago, it's like owning a house, and now the house would be worth this much. But instead of a house, you have one A share of Berkshire Hathaway. So anyway, this one's been choppy too. So we may be okay on this one. But keep in mind, because I'm starting to get, there's like kind of like two different schools of thought emerging in the comment section. I've been seeing some people are kind of debating back and forth, which is good. I like that. But some people think that because it's covered call payouts, that there's basically no impact based on how the stock performs. But there is, like I showed with Tesla, TSLY. There is an impact. It's not just the covered call payouts. You're getting basically half of your return from the covered call payouts, the other half coming from how the fund actually performs. And again, we showed that with the TSLY. How time is it here? So yeah. So with Berkshire, I wouldn't worry fully about the covered calls because Berkshire is usually a top performer. So, you're going to get half. I think if you just judge by TSLY, you're going to get half of your performance just based on how the stock performs. And it's still going to go up based on that. Just again, look at TSLY, overlay the two charts, which I did like 2 videos ago. I need to start linking these videos. I've been slacking on that, but I'll get back to it. Okay, let's see. And then more stable income. Yeah, that's possible. How much, let's see, how much dividend would be the question it generates? Yeah, we don't know yet because it's not public. We'll see. I'm anxious to see how much the APLY is going to pay because I think, like the others, the first month could be the best month as far as dividends. So that could very well be what happens. Like we saw with OARK and with TSLY, we had like the $1 dividend per share. That would be phenomenal. And then William says, but what happens if Tesla runs up this year? There will still be NAV decay. Interesting. I never quite heard it referred to that way, but yeah, I see where you're coming from. Since TSLY almost copies Tesla price, I think it's a good price point to buy in. That's exactly what I've been saying for probably the last week or so. This may be the best price that you're going to get, but who knows? I think, like I said, I'm bullish, really bullish on Tesla over the next 6 to 12 months. So, and then, oh, look who showed up here. Cool name again. The fund I'm looking for is YTLT, tracking the Treasury Index TLT. It will probably have a lower dividend but be more consistent. Yeah, when is that one coming out? I'm not really sure on that one. The YTLT, is that the same fund family? I'm not really sure on that one. And then William says, I don't like OARK, Kathy Wood, ARK. I feel like her picks aren't good, only Tesla. She depends too much on low interest companies that need rates is to grow. Well, that's kind of like a run-on sentence there. Let's try to pick this one apart. So, okay, you don't like OARK. Yeah, Kathy Wood, I'm not a huge fan of her either. She's kind of lost her mind. I mean, she was doing great in 2021. Yeah, her picks are like, it's like throwing darts at a dartboard. Like a lot of them are missing the bullseye. Some of them are even missing the board entirely. She depends too much on low interest companies. Yeah, well, she depends on buzz companies. It's the ARK Innovation Fund. So it's all these like buzz, clean energy, the future, stuff like that. So let's see here. Yeah, Tesla could have a bad earnings report and could be down. So that could create another buying opportunity for TSLY. Who knows? King Leong. You should make your name like Kings of Leong, like the band. It would sound really similar. But cool name. I like it. There's already a similar fund called TLTW. Yeah, you're right. I think I did a video on that one. But I think that's a bond fund. So there's not, as the yields start to come down, there's not going to be as much upside in those. And then you said they did make as much profit. Who is they and what? Maybe you're talking about the TLTW. I'm not sure. But anyway, back to Berkshire. So let me show, because I did this on the phone, but I can show the chart here. It's more volatile than you might think. See how choppy this is? I mean, there's a lot of volatility here. So those premiums could be juicier than we might think. Got the sneezes tonight for some reason. So yeah, that's Berkshire Hathaway. We did look at the A shares. So what's the next one? Oh, NVIDIA. I think I looked at NVIDIA yesterday, but there's one coming on NVIDIA. Let's look at Apple. Because obviously the APLY just debuted today. What's Yahoo doing? And then, so there's these other ones too. When you type in Apple, there's these directional 1.5 shares, like probably a levered ETF, like a direction daily Apple Bull 1.5 shares. Now that's a perfect hedge. How about that? You can have the upside and the downside, AAPU and AAPD. How about that? Interesting. And I've heard that Apple is actually one of the best stocks to sell covered calls on. But if you're going to get into APLY, you don't need to worry so much about that because you're already getting the covered calls by being in the fund, right? So Apple, I think it's very close to a 52-week high. The 52-week high was $176, and I want to say that was back in August. Yeah, 172. 52-week low was 130, and so we're very close to a high in Apple. So it's going to be interesting to see. I think Apple, once the market kind of once things start to smooth out, which hopefully will happen. Who knows? But Apple split so many times, and Apple usually has been one that consistently goes up. So when that happens, like I said, APLY could be a great opportunity. And then let's see, what did you say here? I am tempted to sell my OARK for APLY as it's more stable. Yeah, you might be right. I would actually probably do that same thing if I had that, because it looks like their dividend is starting to fizzle. And like I said, I'm not a huge fan of Cathie Wood. She's kind of lost her mojo since 2021. Of course, everybody looked like a genius in 2021, the way that market was performing. But let's see. So I've got 8 live viewers. I kind of want to keep going. Anybody have any other comments, any other funds they want to look at? I like when I get a lot of live viewer participation. Like Saturday, we had a record, which I was surprised. Oh, and got the first super chat Saturday. Just keep in mind that button works every day, not just on weekends. But yeah, so what else can we talk about here? My hockey team won today. The Lightning, they won. That was a good game. Okay. So yeah, like I said, I'd probably do that same thing. I'm not in OARK at the moment. I got a lot of TSLY. I have SVOL. I sold out of JEPQ to get more TSLY. Yeah, I know. Yeah, you missed Saturday. You weren't on, but I had like 20 live viewers for a Saturday. I was shocked because I wasn't even planning on doing a video, but I was like, what the heck? I could probably, if I if I was better with my time, I could probably squeeze out a video every day. That's what I try to do. Now let's see here. I'll get to your comment in a second. King Leong says, would go for the YieldMax fund based on GDX. What's GDX again? That used to be the name of a local movie theater by me. It's funny because they changed. The AMC bought them up. If there's any AMC apes on there, AMC has money to just buy up all these other movie chains. But I got to tell you, they run it like a corporation because the GDX theater used to be great. It had a restaurant, it had drinks, it had a full bar. But now that AMC took that sucker over, the restaurant's gone. They barely have like 2 beers. I mean, it's very corporatized now. It's like a pre-COVID memory now. But anyway, tell me what GDX is. Is it Van X Gold Miners ETF? Is that what it is? It's only yielding like 1.47. But I know what you'll probably tell me. You'll say you got to focus on total return because you got to look at how the stock's doing. Which this one's been choppy too. I'm looking. It was down to 26.68 March 9th. It was up to 35.87 recently. Presuming that's the one you're talking about, which I think it is. Okay, let's see. I gotta address this comment here. How dare you stream on that day? Well, I'm still trying to hit my watch hours, so ideally I should be churning them out every day. But like I said, I wasn't gonna do one. I don't know what got into me, honestly. I was just like, you know what? I'm feeling a video. I had that voice in my head, and the voice in my head was right because got the first super chat and had a record number of live viewers, which shocked me for a Saturday. Now, as far as the Lightning sucking, I don't know where your assessment on that's coming from. I mean, they won today, and they've won like two cups in the last 3 years. They should have gotten 3, but that's another story. But anyway, to each their own. Anyway, okay, so let's see. What did you say here? At King Leon, the premiums on that one is going to be insane since gold miners are very volatile. Well, the fund is volatile. I mean, I just looked at it on the phone here. Let me stop sharing this Yahoo screen. I don't want to give them any free advertising. I already gave them a sound advertisement because I had my, I didn't know that was going to come up. But anyway, okay, I'll just keep reading comments. So, yeah, that one, the gold miners ETF. I don't know how much gold they're mining, but yeah, it did look very volatile. And then let's see. And then you agreed. And then you said SVOL is still doing well. Let's look at that one. So I guess we'll go right back to Yahoo. Yeah, SVOL, like I said, that's a pretty stable one, I think. Oh God, we have a QYLD mention. I stopped looking at QYLD. You know what? I should probably sell out of mine. Let me look at that one too while we're at it, because I haven't been paying attention to that one. As long as the fund is up, going long term like Apple, I'm currently stuck on QYLD. Why are you stuck on QYLD? I went through that phase like a year ago, and it's not the top performer. There's many better options to be had. So, and the funny thing, the way I found a lot of these, I actually saw other YouTubers talking about these funds because I was studying different funds that I could talk about, and then I started getting into them. So I went through the whole QYLD phase. I was like, wow, look at this. Look how it's named. It's like quantitative yield, 12%. How awesome is that? Yeah, this is good. I would have done the same thing. In fact, I should do that because I still have some QYLD. But let's look at that one real quick. Let's look at, we'll go from best to worst, we'll look at the worst one first, and then we'll save the best for last. So we'll look at QYLD. And let's see here. Netflix. There's a Netflix fund coming too. Anyway, so QYLD is 1730 right now, and it's going to be up 4 cents in the after hours to 1734. And what the heck is this? This is the daily, how it did today. That's one of the most choppy charts I've seen. It's still holding steady at 12%. Expense ratio is 0.6, but if we look from like a year ago, see, it's been dropping, and it's been around for like 10 years, but it's steadily dropped from that 2013. It's almost 10 years old. It's dropped like $7, but you've probably made up for it in dividends. So yeah, I might get out of that one. I don't have that much of it to begin with, but SVOL, yeah, I like SVOL better. Oh, we're up to 22.16. We lost 1 cent today. It looks like in the after hours, we're gaining 4 cents back tomorrow. So it's kind of holding steady. Yield 17.83%. So holding close to the 18%. Yeah. So King Leon, you did the same thing I did because I bought in around 20 or so about a year ago, and it's down. So I don't know if I've made up for it in the dividend or not, but because I'm kind of stubborn, what I end up trying to do is hold on to it until I've made back in the dividend what I lost in the stock or the ETF. So that's kind of what I try to do. QYLD could be a good buy if the market goes back up. Well, see, the thing is, it underperforms the NASDAQ, even though it's indexed for the NASDAQ. If the NASDAQ starts to soar again, we'll get a little bit of that, but it really caps the upside if you look at it. Like if the NASDAQ's doing this, QYLD is only going to do this. And who knows what the dividend or the covered call payout will do. And then let's see here. XYLD has the best long-term chart of all the YLDs. If it's the one, it's the only one I still hold. I did a video about a year ago on all the YLDs, and I think you're right. I think in terms of total return, the XYLD was better. One of my best dividend videos, it was a homemade thumbnail when I actually put more effort into the thumbnails. Now I'm just using the same one because it doesn't really affect the views, so I've kind of gotten a little lazy. But there's a thumbnail from like a year ago where it looks like I'm juggling the 3 funds, and I talk about how XYLD was the best one. And yeah, it is, comparatively speaking. I did research that myself. and it is the best of the three. So yeah, I might wait till it goes up to $20 again, if it does. Hopefully it does, or maybe it could possibly get back to where it was like 10 years ago. Anyway, well, we've hammered these funds pretty good today, so that's about all I have for you all. If you like that, please remember to like, comment, and subscribe. Thank you all for tuning in. Good session again, good comments, and thanks to all of you that will watch on the flip side. Take care.